Well, good morning. This panel is called Bracing for a New Reality. And I guess if we think about it, not long ago, economically speaking, we were bracing for a lot of bad stuff. We thought maybe we were going to face a sort of 1970s style inflation problem, but that seems to have been resolved in most places without a 1980s style recession, even though we've had this extraordinary rise in the cost of money. Unemployment has not risen very far. In fact, I noticed here in Brazil, it's the lowest it's been in a decade. And yet, despite all of this economic relief and resilience, it does sort of feel when we're looking ahead that some kind of brace position is required. Protectionism, rise of economic nationalism across the world, geopolitical fracturing, outright war in the Middle East, in Europe, and maybe more concerning than all of these, a sort of rising deep distrust of institutions and political polarization in our societies, in here, America, and across Europe. We're going to discuss lots of these over the course of the day, but you guys, you get to have the first word. It's quite nice. Investors have kind of managed to look through a lot of this fear, certainly in the last year, certainly in the US markets. Karina, I know you're now managing a family office here. You were managing BlackRock in Brazil. You were spending most of your time looking to the world investment landscape. How are you feeling about the future and this new reality? Do you think we should be bracing for it? Or as investors, we should be marching forward?
Good morning, Stephanie. Good morning, everyone. It's a pleasure to be here. Thank you for the invitation, Bloomberg, and congratulations on putting together a great event. I do think the investment landscape globally today is still highly uncertain, but that doesn't mean it doesn't unlock a number of investment opportunities for investors. And I think there's really four pillars that are driving and defining the investment landscape today. I think the first one is a completely different paradigm for monetary policy going forward. So when we think back, for most of the last 4 decades, call it from 1980 to 2022 specifically, the world experienced a secular, persistent decline in interest rates. And then we had a temporary blip in 2002 and 2003 where interest rates came back up, and now they're starting to ease again. But I think very few investors today look at the situation and say, well, we're going to revert back to those historically low interest rates that we were accustomed to. We're actually entering a completely different period for interest rates that most of us believe are going to be higher for longer. And the question is just how high and how long. And that's a completely different set of implications for investment portfolios going forward. I think secondly, we've seen the rise of Gen AI. And there's a lot of conversation about what that means for productivity and ultimately for corporate earnings, and what that's going to do to equity valuations and equity markets going forward. Thirdly, and I know you'll talk extensively about this throughout the course of the day, we're undergoing a transition to a low-carbon economy. That transition has started. It will likely intensify and accelerate. It will be uneven across the globe, and it will impact sectors and economies very differently and unlock a number of investment opportunities. And I'll just wrap up to Stephanie's earlier point with what I think is the fourth dominant theme today impacting the investment landscape, which is this increased geopolitical fragmentation that we're witnessing in the world today. COVID exposed the fragility of global supply chains, but what we've seen since then is actually a world where there's a much less stable balance of power between countries that are friendly to Western ideals and countries that are not. And that means a very different set of volatility characteristics for investors going forward.
José Olympio, you're here in Brazil, I know, more focused on the wholesale business of Banco Safra.
Yep.
How does the world look to you, this world described by Karina?
Well, I think Karina hit it on the spot. I think that we're living in a very uncertain world. Now, during my lifetime, I've never witnessed 2 wars going on at the same time. The perspective of one of them getting much more serious, with the involvement of Iran and a broader conflict in the Middle East. We have this whole, well, I don't want to repeat you, but the polarization that's going on, the uncertainty with U.S. elections. What's the world going to be after the election? What are the impacts of one candidate's policies and the others? But it's interesting because at the same time, we had the S&P reach record after record this year. So, and we've seen business continue to invest and to develop. And so even though we're living in a very uncertain world, it seems that business and investors have continued to move on with their objectives. We recently saw two major foreign direct investments in the Brazil infrastructure sector. So it's a way you can look at the world right now as half empty or half full, because there are plenty of opportunities. Generative AI, for example. I mean, you can look at it as a way to increase productivity enormously, but you can look at it as a way of what's it going to do to the workforce and to unemployment and to all of that. So, and that's all to be seen. And when you look at Gen AI, you went back to the Industrial Revolution and to many other disruptive technologies that went on and that, made people think that labor was going to be no longer that much essential. And, we all reinvented ourselves. Services sector grew. And I remember meeting Mike 6 years ago in New York, and he's saying that I'd be happier, I'd be calmer now if my son were a plumber or a cabinet maker than a lawyer or a general practitioner in medicine, because he'd be much safer with his job. But that's how the world lives. And I think that it's interesting because we're learning to live with uncertainty and with potential risks, and that's not affecting the world's ability to move on.
Well, I wanted just to follow up on that, José Olympio, that one of the things that we've thought, and Bloomberg Economics has done some work on this, is with all the uncertainty, with all the fracturing, the throwing up of the cards in the global system also opens up possibilities for new countries to benefit, find themselves in a good position. And very high on that list, you would think, would be Brazil.
Yeah, absolutely.
Especially in the context of a new government that has taken quite a lot of steps that should be reassuring to investors. We've seen inflation come down. We see now, just for a recent upgrade on the rating, just a notch below investment grade here. And yet, even though Brazil could be potentially one of the sort of winners and examples in this new world, sitting between the two, US and China, we don't see a lot of money pouring in.
And
why not?
Yeah. I wanna make the distinction, because portfolio money has not been coming, and that's true. I mean, capital markets activity, new issuance activity in Brazil has been very slow, and IPOs, we haven't had an IPO now for the third year in a row. The Bovespa in dollar terms is down this year. But at the same time, and this is for portfolio money, this is for money that can get in and out very easily, depending on their view of Brazil and decisions. I think there's a general pessimism in the Brazilian financial system, and concerns about our fiscal situation and all of that. But at the same time, you have strategic investors that see in Brazil a once-in-a-lifetime opportunity to grab strategic assets. And, in the last month...
It's cheap. They're very cheap.
And, in the last month, you had two major European infrastructure companies buy port companies here in Brazil, the Santos Brazil Terminal Container in Rio, the Wilson Sons, Salvador and Porto Alegre, we're moving ahead with infrastructure concessions, and we're seeing foreign money come in, either through funds, private equity funds, where you have, long-term money investing, or directly with strategic investors. So the country is attractive on a long-term basis. I mean, we're going to need massive investments in infrastructure. Our rules are relatively stable. They're not perfect, but they're good enough to give people comfort of coming here and invest. And I think there is a lot of global money available to come here for these long-term opportunities. And at the same time, if you look at countries as large as ours in the rest of the world, and if you look at it through the prism of size, potential for growth, and institutional stability, we compare very favorably. So I think we're benefiting from the fact that there is, polarization and disputes over, large, China and the U.S. and all of a sudden, we're here. I mean, we are, and we should be friends to everybody. I mean, I don't think we should pick sides. I think we should look what's in our best interest.
Karina, I know you're looking to the rest of the world primarily, but as a global investor, and there'll be global investors looking at Brazil, what more does the government need to do? I mean, José Olympio is right that there has been more direct investment flows, but it's not rising as much as you might think. What more needs to happen here?
Yeah, I should contextualize this by saying that in general, U.S. investors have been taking limited risk appetite in emerging markets because rates in the U.S. are still very high. So that has affected emerging market flows more broadly. But within the context of emerging markets, I think Brazil does have an opportunity to be a higher protagonist in terms of share of flows. And I think what investors are looking for is really a question of indicators of sustainability. Right? So how sustainable is this moment? Is it going to be what Brazilians call voo de galinha? Or is it actually on track to be maintained in the medium to long term? And a lot of that is around concerns around fiscal credibility, which José Olympio mentioned, the protection of investor property rights, right? Is the judiciary in Brazil preserving the rule of law in Brazil as foreign investors expect? And I think there is a third component, which is very subjective. Often people talk about the currency and the volatility of the currency and how hard it is to hedge, but I don't think that's the biggest driver. I actually think, and I'm Brazilian, so I'm going to go out on a limb and be controversial, I think Brazilians are not good ambassadors of the Brazil story, right? In a lot of ways, Brazil is self-sufficient. In other ways, Brazil isn't self-sufficient and needs foreign capital, but it's very inward-looking. And when we tell our own story, we tell the story for other Brazilians. We don't tell the story with foreign stakeholders in mind, with a foreign audience in mind. And so we don't craft the narrative in a way that's appealing to that audience. So it's much more around how we message the story and how we market our own story than anything else. But there's a human emotion attached to that.
José, do you think...
Yeah, I think...
Are you not a good enough ambassador?
Well, no, I think you're absolutely right. And, way back, I suggested to the previous government that there should be an investor relations function here in Brazil, just as companies sell themselves and sell their... because I think that we tend to be too negative on ourselves. And that's fine as long as we're talking to ourselves, but I think we have so many opportunities, so much potential that we should be more outspoken outside about it than we have been. And so to a certain extent, our whole criticism of ourselves, which is fair. I'm not saying that we shouldn't criticize and we shouldn't look at points that are not that need to be improved, and the whole discussion of the fiscal side and legal security and all of that. We have tons of things to do. But, we have lots of opportunities as well. We have good things also. And we need, I think, to sell ourselves better to the rest of the world than we have been doing. And I think if I may compliment, and I think we have an issue of the region where we are. Latin America, you look at our neighborhood and the whole region hasn't seen much growth and lots of instability and all of that. Whereas you look at Southeast Asia, for example, all of the countries are growing, and the attention of global portfolio investors. When you talk about emerging market investors, they're looking much more at Asia than they are at Brazil.
But it's interesting. It's an opportunity because historically, China has accounted for roughly a third of emerging market allocations for global investors. And as U.S. investors, in the context of the rising geopolitical tensions between the U.S. and China, have to reallocate investments away from China, that would be a huge opportunity for countries like Brazil. So this is a great moment.
So I guess one big topic that I know you're both interested in from different sides, and I think demonstrates maybe the need, the sort of diplomatic challenge for Brazil, but also the economic opportunity, not just here, but globally, and is obviously energy transition and climate change. There's a widespread understanding that solving the climate challenge, Brazil's going to play a massive role in that. And I think the other side of that would obviously be that there's an opportunity for Brazil to be an example, but we haven't seen that so much over the years. José, where are you seeing that? Where are you seeing businesses come to you and actually want to do something new in that space?
Well, I think there's a lot going on here in Brazil. I mean, number one, if you look at the global energy matrix, just 30% of the energy matrix is renewable as compared to 46% in Brazil. Someone mentioned, I think it was Minister Favreau yesterday, that 90% of our electricity comes from renewable sources. There's been massive investments in solar and wind more recently, up to a point that we're now getting to a point that we're generating more green energy than we can use, and that's creating short-term challenges. But definitely, I think Brazil can really lead the way in energy transition. And I'll give you an example, ethanol. We started, Brazil is a big producer of corn, and earlier than 10 years ago, we started, private sector firms started making ethanol from corn, which was something that we didn't do before because all our ethanol came from sugar cane. Well, guess what? 20% of Brazil's ethanol is now produced with corn, and that's growing. So we have an opportunity of creating, renewable fuels and biodiesel and green energy. And I think that may give us even an opportunity to reindustrialize ourselves based on green energy. Green steel, using sustainable sources of energy for making steel, and other industries, selling the products based on the fact that they're made with sustainable energy, with green energy. And I think that's an opportunity. So I think we're in the middle of a big transition. And when you look at it globally, I think we're very well positioned to take the lead in that sense in the energy transition.
Karina, we don't have a huge amount more time, but I wanted to sort of take us back. I wanted to focus on Brazil in this session because I think it's important. We're here, but also there's some very interesting debates that we might not get to later in the day. But you started with that much broader point about the rising cost of money long term. And we've done, in the Bloomberg Economist, we've done a lot of big studies on this suggesting the same as you, that there's going to be a manageable but significant increase in the long-term cost of money. How is the climate challenge contributing to that? How should we think about globally here in Brazil, the demands that requires, the funds required for that, how that may feed into the rising cost of money?
Sure. I think the transition to a low-carbon world is inevitably going to drive much higher levels of spending, and that is inflationary, right? So when we think about we need to spend to adapt to new policy environments like the Inflation Reduction Act in the U.S., We need to spend to develop and commercialize new greening technologies and eventually get them to scale. We need to spend to adapt to evolving consumer preferences, like preferences for electric vehicles. All of that is going to drive a lot more spending. There's all sorts of estimates about how much more, but they're all a lot more. It's really like orders of magnitude of a lot more. So it is my belief, for example, that we'll be spending double the rates in the energy sector, from roughly $2 trillion today to $4 trillion in the future annually than we are. So that's a meaningful, extraordinary amount of spending, which is going to increase the cost of money. And it's happening at a time of record public sector deficits, right? Governments are very strained. So there is a very, very large role for private capital to play in that equation in order to actually provide that source of financing. I would also add that in addition to increasing spending levels and being inflationary, at least in the short term, until those new technologies start to gain scale and the cost of the technology comes down, which might ease some of those inflationary pressures, but at least in the short term it's inflationary, I would add that it's going to massively reallocate capital flows for the future, right? Because today, developed markets are leading the way in the energy transition, but emerging markets are going to play a very, very large role in the future. They're going to be at least half of the carbon dioxide emissions over the next few decades, and emerging markets have a much higher source of cost of capital. And so that's going to be very impactful for portfolio allocations.
José Olympio, when you think about the sort of sectors that people should be focused on, if you think about where the potential upsides might come from in Brazil, when you talk about the glass half full at the beginning, where is there opportunity?
Number one, infrastructure. I think we need massive investments in infrastructure. We're going through the process of privatization of our water and sewage system, where we're way behind. Just to give you a statistic, less than 50% of people have treated sewage, which is appalling in the 21st century in Brazil. And ports, roads. Our agricultural production is 2,000 kilometers away from ports. So it's critical that we have efficient logistics, efficient infrastructure to be even more competitive with our agricultural products. Energy transition as well. I mean, you've seen massive investments in ethanol from corn positions, companies that started 7 years ago and now are worth in the tens of billions that have, basically taken advantage of this opportunity. So I think that I would say that these are the two most interesting sectors at this stage. As far as green energy, I think we're going through a phase where, we've invested ahead of demand, and we're going through the pains of finding demand for all the green energy from solar panels that's been created. But that's going to be resolved, because that excess green energy can always be used from Bitcoin miners to, green hydrogen plants and uses of energy, because the challenge of solar is that the energy is not continuous, right? So you have to find demand at the right time. And I think that the other part is the development of technology. Solar, the cost of solar panels went down dramatically in the last 10 years, which made it competitive. Now I think that the next challenge is batteries, and storing energy. Sorry.
No. Well, we have run out of time, but I know you care about this, and I think it's relevant to just ask you very briefly at the end. I started talking about the success of particularly the US economy, but the resilience in general of the global economy. Of course, the nagging fear that we have when we look at the US is this is a country that has been more economically successful than many countries, risen to many of the challenges that we've talked about here that Brazil has struggled with, other countries have struggled with, and yet not brought its people together, not brought large parts of society along with that success. And you have this polarization, which is clearly a very troubling issue in Brazil as well. I just wonder whether you worry that even if you rise to these challenges in Brazil, that polarization will come back to haunt you.
Well, I think that Brazil has chosen to have a very significant welfare program, the Auxílio Família, that basically, has risen from 50 billion reais a year to 160 billion. So we have a big investment in taking people out of poverty and so on and so forth. But I think that the challenge is not, doling out money. The challenge is how do you incorporate this workforce into, services industries or things so that people can have a decent standard of living. And that's a challenge, and that's what we want.
Karina, José Olympio, thank you so much. I think we've got into a lot here. Many of things will be picked up over the course of the day, but you've got us off to a good start. And José Olympio, I think you've given us the bombshell news that Mike Bloomberg would prefer his kids to be plumbers, which none of us knew. Thank you very much.
Thank you.
Thank you.